We currently have a team that will invest in the site for the establishment of a manufacturing facility in Mexico. We may be able to formally declare our intention to invest in Mexico by the latter part of this year. Therefore, in the latter part of this year, you will make the announcement. However, our goal is to construct a plant in the central or south region. Our primary goal in constructing this factory is to serve the Mexican market. It's not to establish that Mexican manufacturer to help us. We have no intention of visiting the United States. No intention to visit the United States. No. Why not? It's too difficult. Although it's an intriguing market, discussing EVs makes it extremely complex. I believe there is a lot of misinformation and that the U.S. market is a little slower when it comes to electrification. It is also extremely complex. In the very competitive Chinese market, Victoria's rise suggests great potential for success outside. Think about this. Although BYD and Tesla are direct rivals in China, this does not lessen the significance of Tesla's accomplishments. Indeed, Tesla has concluded what appears to be a record-breaking quarter in China. Imagine Tesla and BYD, two titans of the electric vehicle industry, collaborating. Don't you think it sounds like something from science fiction? Hold on tight, though, since this situation may not be as unlikely as you believe. Before we go into the specifics, please remember to help us by enjoying this video and following our channel. That being said, let's begin this video. This is Tesla stock news. These two titans have been engaged in a protracted struggle for supremacy in the EV market. However, there have been indications lately that their icy relationship is warming up. When Tesla began utilizing BYD's LFP batteries in certain German-made Model Y vehicles in 2022, that was the first clue. This surprising cooperation raises the possibility that both sides will gain from cooperation. However, how would this collaboration help them? And what may it signify for the stock price and value of Tesla? Let's investigate these options. Please remember to activate the like and subscribe buttons before we begin. A BYD representative recently voiced concerns about joining the U.S. market, pointing to its complexity. They drew attention to problems like unclear regulations, difficulties with the charging infrastructure, and a large number of customer options. Conversely, China's government's overt push for electric cars incentivizes businesses to make investments or risk falling behind. But they also emphasize the value of fair competition and an open market, which are fundamental to the U.S. economy. Despite the difficulties, American automakers are taking notice of Chinese automakers who are making inroads in areas like Mexico. Concerns over the competitive threat posed by Chinese manufacturers have been expressed by industry heavyweights, including Elon Musk and executives from Stellantis and Ford. Without trade restrictions, however, are Chinese businesses able to dominate the market and compete fairly? Let's look at it from another perspective. Consider BYD as an example. They have made investments in manufacturing in Mexico with an eye toward the local consumer base rather than entering the U.S. market. This strategic strategy is in opposition to the notion of cross-border expansion. When you think back on the history of automobiles, do you recall the decades-long entry of Japanese brands into the U.S. market? Despite similar concerns, local brands managed to prosper alongside international rivals. Concerns regarding Chinese competition in the electric vehicle market may be overblown. Tesla's profit margins, meanwhile, are under pressure and might stay that way for a few months. Even if some people are still optimistic, Tesla's profitability may suffer this year, which would upset a lot of investors. What if Tesla chooses to make changes in order to increase the value of its stock? Imagine this. They form a groundbreaking alliance in the field of electric vehicles and cars with their fiercest competitor. Imagine it. Beyond batteries, a partnership between Tesla and BYD might lead the way in developing autonomous driving, battery technology, and other vital EV research areas. When combined, they might drastically reduce production costs and increase the number of people who can afford EVs. This unified effort may solidify their market leadership in EVs and accelerate the transition away from gas-powered automobiles. Let's go right to the point, though. What effects might this partnership have on Tesla's stock price and valuation? Although there is no assurance of winnings, there are a lot of possible benefits to working with BYD. A collaboration of this kind would increase investor trust in Tesla's long-term goals and capacity to control the EV industry, the stock price of Tesla. In order to serve the Mexican market, BYD intends to reveal its plans for a plant in the second half of this year, focusing on the south or central region. Despite the recent drop in Tesla's stock price, some investors believe the company's wider technological endeavors beyond EVs present an opportunity, particularly considering the current pricing in comparison to a few years ago. But this optimism is not shared by other analysts. According to Mark Houghton, an investment director at JAM Investments, a number of obstacles, such as price reductions and possible declines in demand, will prevent Tesla's stock from ever reaching $300. Tesla's impressive profit margins, which are evidence of its operational effectiveness, set it apart from its automotive competitors. The business made $81.5 billion in total revenue in 2022, with an outstanding operating income of $13.7 billion, which translates to a healthy margin of 16.8%. Compared to its U.S. competitors, such as Ford and General Motors, which usually have single-digit margins, this stands in sharp contrast. Tesla's profitability is influenced by a number of things. First of all, its well-known brand makes expensive advertising unnecessary. Furthermore, effective management has increased battery production capacity, streamlined manufacturing processes through vertical integration, and avoided dealership networks by selling directly to customers. These tactics increase profitability and margins. Additionally, Tesla is at the forefront of AI-powered self-driving software and is expected to enter the autonomous robotaxi market by 2024. According to ARK Invest preliminary estimates, self-driving cars may open up a $14 trillion industry by 2027, which would further fuel Tesla's expansion. Additionally, demand for Tesla's home solar and battery storage solutions has increased dramatically in Q1. Deployments of battery storage capacity increased 360% year-over-year. In order to serve low-skilled industries like manufacturing, Tesla may expand its product line by releasing the Optimus humanoid robot by 2027. Even if there are differing views on the Cybertruck's appearance, fans like Alex Shannon from San Diego, who recently purchased one, are enthralled by Tesla's creative approach. Despite having been ordered without seeing it, the Cybertruck's futuristic appearance and electric performance moved him to tears when it was delivered. With forecasts showing a spike in worldwide EV production, Tesla is still well-positioned for long-term development as the electric car market expands. Tesla's aggressive expansion goals are in line with industry projections. Although only 10% of new cars are currently electric, predictions indicate that by 2040, they will account for an astounding 61% of the market, making the future exciting for both Tesla and the larger EV sector. Since the electric car business is still in its early stages, Tesla's strategic goal is to increase its market share over the long run rather than focus on making quick money. Even while it faces competition from up-and-coming firms like Lucid and Rivian Automotive, Tesla has all the resources it needs to maintain its leadership as the EV market develops. Tesla hopes to fend off possible commercial threats and maintain its market position by maintaining competitive prices. Furthermore, the possibility of working with BYD would raise Tesla's valuation even further, with a $233,000 price tag. Chinese automaker BYD just introduced the U9, an electric supercar that will compete with Ferrari. The U9 has amazing stats and can reach speeds of up to 190 miles per hour, despite its peculiar three-wheel drive system. It's evident that the U9 and conventional luxury sports vehicles serve distinct markets, despite the fact that some people compare them. However, despite worries about how recent price reductions may affect profitability, Tesla is still growing. For its upcoming generation of cars, the business intends to cut prices by 50%, demonstrating its dedication to sustaining profitability while guaranteeing accessibility for a larger customer base. Tesla's stock price has fluctuated, but it's important to recognize that it is still recovering and that there may be more improvements to come. Although Tesla's margin advantage worries some experts, the company's mass market strategy might end up being more profitable in the long run.